welcome to this Diwali special. We're calling it the Diwali Dhamaka 2075 Samvat, the street view. And who better than two veterans, Nilesh Shah from Envision Capital and Raamdeo Agrawal from Motilal Oswal joining in to really put sense to this madness that we've seen from the start of the year to now. Gentlemen, good to have you on the show. Firstly, happy Diwali from all of us.
Yeah, let me wish all the viewers very happy Diwali and very, very prosperous and happy investing experience.
That is
Samvat
what we
2075.
need. That is what we need, prosperity. Yeah. You know, it's like the other day I was chatting with someone from the markets. I will not tell who, but he said, market में ग्रहण लग गया है. India को ग्रहण लग गया है.
ना कुछ नहीं लगा. ऐसा सब बातें नहीं करने का. बहुत अच्छा है. यदि आपको एकदम कोई करेक्शन पसंद ही नहीं है, आपको हर चीज बस ऐसा रॉकेट की तरह ऐसा नहीं होता भाई. That is not market.
No, I agree that. I agree that in stock markets, the gains are not linear. Yeah. But the challenge is that the reboot or the reset also has been quite extraordinary, isn't it, Nilesh?
वो वैसे होता है, ऐसा कोई कैलिब्रेट नहीं आता एकदम, है ना, कि इतना ही 20% वो सब टेक्निकल आर्टिस्ट बताते हैं सर 33% हो गया, 50% हो गया, उनके चार्ट में होता है पीछे देख के, आगे तक के नहीं होता कुछ भी.
Nilesh, what is your prediction telling you?
Well, it's always hard to make a prediction, but what it looks like is that we will continue to kind of be in a consolidation phase. I mean, we're coming out of a 3 to 4 year of a very solid bull market. A bull market which was resting on a lot of expectations based on a lot of reforms which happened, and obviously the expectation was that a lot of the outcome or the output of those reforms will kind of materialize in this financial year or maybe even the next financial year. And some of those expectations are not kind of met. Earnings have yet to catch up, and what you're really seeing is that the heady valuations which the market had acquired, there's some kind of softening happening, that some cool off happening out there, and it's quite possible that this cool off can continue to kind of extend for even a longer period than what we think it can. So it's quite possible that we may still spend the next 3 to 6 months trying to navigate through this scenario before we kind of see some positive triggers, especially in terms of earnings, to materialize.
Raamdeo, for the longest time we've always debated events, possible outcome of the events. There is something on somewhere in the world and we tend to focus on that, but what we should focus on is prices, value of the business, risk and margin of safety. So if you have to analyze this market based on risk and valuations, where do we stand? Because it's not a cheap market, earnings are not that great, but the proposition to sell also is, I think, too late now.
Yeah, so clearly market has extended itself in this 4 years of sustained rise, and though the market cap to GDP is still about 70 to 73%, which is very, very reasonable, but there are no earnings. So what has happened in the last 4 years, the earnings have got stuck at about 4 lakh crores, the total earnings, and the two sectors which have kind of contributed a lot to the depression in the earnings. One is the public sector banks. The accumulated loss in March 18 was about 85,000 crores, all put together, all 20-25 banks. Then you have the telecom, which has become so much larger, is probably second largest in the world, and yet it has negative. I mean, like 8-10,000 crores negative between all 3-4 of them. So that is what is hurting. I mean, in aggregate, if you have a lakh crore profit from PSU banks, which should be actually more, much more, and say another 40-50,000 crores profit from telecom. So that itself, from negative a lakh crore, you could have positive 1.5 lakh crores. So that 4 lakh crores today could have become, say, 6.5 lakh crores. That would have looked much more respectable, and the P multiple would have come down from, say, 21 right now to more like 14-15. Then it would have looked vibrant and very, very fairly valued. So earnings are not there. I mean, we can visualize and dream or whatever, but those numbers are not there. Neither telecom has the number, nor PSU banks have the numbers, and neither there is a analyst forecast that in next 12 months it is going to become very big.
This is the most cautious, bearish or circumspect I have heard you in the last 3 years.
Yeah, but this is what I did my wealth creation study. This is what the numbers are showing. See, Nikun, two things. One is about the valuation, and second is where the market will go. Please don't. These are not things which go together. Your markets, stocks are kind of valuations are pretty high for last 2.5 years. After that 14-15 rally, 85% or something market rallied from, I think, 40 or 45%, 50%.
Last year 40% on the small
in 2014-15 after Mr. Modi was sworn in. So that time stocks went almost to the sky, and from there it went to even higher sky. But the liquidity, the flow, sustained flow of DI, despite the FIs were going out, that kept the valuation at a high level. So last year we got 2.5 lakh crores of only DI mutual fund inflow. Forget about what happened in insurance and PMS or some other private. So that was unprecedented, and now those flows are like 50-60% corrected, or maybe even more. So at lower levels of flow, how do you sustain if the underlying fundamentals are not justifying that? So that's where the problem is. I mean, there is a lot of appetite for the equity. Good companies are more than fairly valued, and today also if you come out with good result, you see the response is pretty good.
Okay, so the froth has settled down from the start of the year to now. Q2 has been muted, barring a few impressive numbers here or there. Q3 is only going to perhaps get worse from here for selective pockets. Is the market already pricing that in?
Yeah, I mean, if you and me are discussing here, obviously market has priced it. I mean, we are not talking something which market doesn't know.
Nilesh, same time last year, I guess the market narrative was that how much market can go higher. Today, I think we should be focusing on that how much markets can go lower. How much of the bad news is in the price, and where do you think it's time to really start putting the cash to work? So what's been your portfolio strategy? How are you dealing with this fall, and where do you think we are headed from here?
See, well, it looks like that a lot of bad news is already there in the price. The fact that a lot of stocks have corrected between 40 to 70% clearly indicates that the market is today really more focused on the bad news rather than what could be the potential positives down the road. What it looks like, what could still kind of be pending or bad news for local markets is essentially how global markets or how international markets really shape up. The US markets have probably just started now the first round of correction. If it's in a way the end of this phase of the bull market for US equity markets, that will have continue to have a collateral damage for emerging markets, including India. That would mean that valuation multiples still come off, prices still come off, and we could see lower levels. The positive, and I think the big positive, while we can keep talking about elections and all of that, but I think the big positive for India could be essentially crude oil prices. I think right now everybody thinks crude oil prices will remain elevated, but if crude oil prices, I think the same time last year nobody thought crude oil prices could go up like this. Maybe today nobody is factoring that crude oil prices can come off. If crude oil prices come off, I think that's going to be a huge positive, and that's something which I don't think is getting focused. So that's really where I think is that probably we are somewhere, a lot of the bad news is behind us, but global markets could be the further incremental bad news, and I think any correction in crude oil prices could be the huge positive news that our markets can look forward to.
But just looking back a little bit, Nilesh, just looking at the way the government dealt with high crude oil prices, the fact that there was an excise duty cut and OMCs were made to bear that 1 rupee, pass through as well. Do you think that the market took in a very bad light?
Oh yeah, it did. I mean, the fact that whatever in just those 5, 10, 15 minutes, the market cap of OMCs, I think, eroded so much. I think a lot of the other PSUs as well, their market caps also kind of went up, and I think it was more about that was actually one of the most important reform measures of this government, that deregulating the oil and gas sector in terms of pricing. It was something which the government had not touched.
And it almost seemed like they rolled back on it.
Absolutely. And I think it was only later on when crude oil prices corrected a bit, and I think the government stepped in and said this was kind of a one-off measure, that in a way it kind of created some kind of a bottom. But it clearly is a message, the market's message, that basically, economic reforms are important, free market economy, pricing, free pricing. I think all those are very strong ingredients, and especially if you want to remain in a bull market.
Raamdeo, broadly the whole overarching theme of the way you manage money is quality businesses, buy high quality businesses, which is high growth and high P multiple stocks. At a time when there is a in general reboot in the market, foreigners are selling out, the focus on high growth, high P stocks, do you think that needs to change, especially when interest rates are also going higher?
No, I see, because we don't change investment philosophy, because the market is looking a little tough, or it is difficult to find those kind of stocks at reasonable prices. I mean, then always you have to work a little harder, and maybe you have to take a little lower return. See, one of the compromises in equity investing is that if I always thought that I manufacture for 25% return, double in 3 years. That was the theme. Market will double in 5 years and will double in 3 years. I mean, that used to be arrogance. But now looking at the valuation,
The market humbles us all.
yeah, big time. I mean that we know. But so maybe we have to take 15% return, maybe 12% return for 1 or 2 years, or maybe even negative return. See, long-term return is made up of good return as well as bad.
Yeah.
So we had very good returns for 4 years, and this is the year of challenge.
So investors should be prepared for a downtick in their portfolio next 12 months. I mean, a 10,
No,
15%.
not necessarily. See, as I said, I mean, valuations are stiff, but a lot of things can change. As Nilesh was saying, I mean, oil has already come down by $13.
And it's
in
coming
just
down
less
at a
than a
time
month.
when news is not bad. It is coming down at a time when
inventory is
news
building
good.
up. So, but then again, I mean, a lot of trick can happen. Spare capacity is limited. Iran is being shut down. So, the supply spare capacity is very limited. If tomorrow, for some reason, if Saudi Arabia and all they say that we are not comfortable with this price, we want to take it up to 80 or 75, I think they can have say on what price they want to have, because supply is not so much excess in terms of demand. So I would, I mean, this itself is a very comfortable level, I would think, and we should, now economists tested the stress level of up to $85. So if it remains around 70, 75, I think broadly will be fine. But it will take some time for us to get used to $70, $72, $80, $85 rupees of petrol, because I believe in this season, even automotive demand is impacted because of the fuel prices. And then of course whatever NBFC mess up we have in terms of flow of credit, that is over and above that. So I think the best is don't change the strategy, but expect a lower return that will keep your head also a little on the ground, and that's a realistic thing.
Besides crude as well as global markets and what they do eventually, which is anybody's guess, do you think the markets also run a big political risk because we're only stepping closer to state elections and the big general 2019 elections?
I mean, see, whatever is the, today pollsters are saying, whatever is the bets, I mean, odds are there about all the 3 states, and even for some soft odds for May. If broadly in those lines things happen, then it's fine. I mean, markets are already priced in.
Okay.
See, whatever you and me know by any stretch of imagination, it's already there in the price. Please, it is so efficient a market, you cannot imagine. When you run the data, then you realize that it's fully discounted.
So I'll tell you what me and Aisha don't know for sure.
Yeah.
Is that how is Nilesh planning to invest in next 12 months? And how are you planning to invest in next 12 months? So Nilesh, starting with you. I'll throw data at you, Nilesh. Nifty in last 1 year has given a 4% return. The small cap index has got crunched. Negative return of 25%. Big divergence. Is that divergence here to stay?
Unlikely. I mean, I wouldn't think so. That
what do you mean by unlikely?
Okay,
Will
so when
Nifty
we
come
look
down
at
or small caps go high?
No, when we look at a 1 year kind of a data, okay, then obviously yes, this divergence will come. But if you look at slightly longer term data, okay, say the last 5 years data, then that divergence may not be there. Okay, if at all, still the small caps would have probably given you better returns. I don't think it's very important what Nifty does or what small cap index does. I think as long as you have a philosophy, you have a strategy, you basically have a preference for quality, you have a preference for growth, and you're looking out for value or you're looking out for margin of safety, I think that finally that matters. Whether you go and buy a small cap, mid cap, or say the large cap is all a function of your own size, the corpus you're managing, etc., and where you're more inclined towards. So I don't think that really matters. I think what is going to be still very, very important is what are those sectors, what are those businesses which will present you an incredible opportunity. The fact is that yes, a lot of these stocks have corrected. For example, you look at say the life insurance space. Okay, I think let's take that because we're talking about financials, long-term opportunity. You could either kind of participate in financials through the credit play. The other way to look at it is also life insurance is an incredible opportunity. The fact that we have under insurance, etc., I think that has been talked enough. But the stock price correction in a lot of life insurance stocks has been huge. Okay, now you could say the correction has also happened in NBFCs, but in NBFC there are really no entry barriers. Okay, there's a shakeout, etc., which can still happen, and you know the entire business will be left to the top 2-3 players. I think in a space like life insurance, the entry barriers are still huge. You don't see every second year life insurance company coming up, and versus that, the stock prices have corrected by 30, 40, 50% for a lot of names. Now, I think again the growth dynamics have not changed. Okay, I don't think they have a liquidity issue or they need to kind of really look out for a lot of business. Okay, I think it's a very sticky business. Now, maybe what one could do really is to say that, okay, fine, the economics of this business are intact, valuations are a lot more favorable than what they were 6 months back or 12 months back, and this is the big opportunity. And I think that's how we will have to think now for the next maybe 6 to 12 months.
Okay, life insurance it is for Nilesh. Raamdeo, where do you find both growth as well as pricing comfort?
Yeah, so like say private sector banks, because because economy is doing well. Economy is doing well, consumers are doing well, the credit profile of my customers are not gone bad. It's just that credit flow is choked because of some other development. So, but credit flow is very smooth from the private sector banks. They have the liability. In fact, now they have ample liability.
Yeah.
All the deposits are,
Good
flowing.
CASA.
Yeah. So I think, and they have got a pricing power, soft pricing power, 25 bips, 30 bips in some segments of the market. So my sense is that even starting December, March, you must see some uptick in the margins for the private sector banks, and maybe 1 or 2, 3% even higher growth also if they have enough liability with themselves. So I think that segment looks, and that has also corrected. That has also corrected. So there one is there. Then because of this higher oil prices, a lot of automotive has been corrected. I mean, if you look at Maruti, it has come down from 10,000 to 6,500 or something like that. So selectively all the segments wherever adversity is more direct, but it's a temporary in character. I mean, this $72 oil or $80 oil, there, I mean, people get used to this fuel prices. People are not going to say that just because it is 90 rupees to a liter, I will never buy a car. It will get delayed. I mean, the demand will get delayed, and then you will have a slow 3-4 quarters, and then accumulated demand will come in maybe 1920, 2021. So again, growth momentum will start. So I think at some price, some of these extremely well managed auto franchises, whether it is two-wheeler or four-wheeler, they would look to be very good. So like that, as the market opens up to give you opportunity, I think you have to keep buying there.
So let me quote world's most famous investor here, Warren Buffett. And one of my favorite Buffett quotes always has been, buy a good business when it is going through a temporary disruption.
Yeah, that's kind of.
Are autos going through a temporary disruption, or this is permanent in terms of demand because of high oil and high interest rates?
No, I mean, I think high oil is clearly, I mean, before we, before the quarter is over, they're down by almost 15%. I mean, $15 is gone. And there is a lot of oil. I mean, actually inventory buildup is happening now. So, and the real long-lasting correction in oil will happen because there is a demand destruction. Not because of anything else. I mean, this Iran shutdown, this, that, they keep happening. But the shale, American shale is producing 11.5 million barrels. So where will you take all this additional oil? And even demand is crunching because of better technology, environmental concerns. So a lot of these things are happening, and that is the longer term shows that my sense is that this $80, $90 of oil is not sustainable levels. It will be much lower. Some people they say 70, some people. When it comes down, people say 50, 60. When it goes up, people talk about 100. But I don't hear anything higher than that. So, so once this thing is settled, I mean, this is what is going to give you opportunity. And but
so will that make you relook at aviation or buy on dips further?
Not aviation. Aviation is too painful in the sense that there are, apart from oil, there are many other things happening.
We'll wait for them to get back pricing
it
power.
is a very high maintenance. I mean, it's a wonderful franchise. I mean, I'm not talking about aviation. I'm talking about Indigo.
It's that's exactly what I was talking about.
We must have this disclaimer.
Yes, we will.
So, but some sectors require a lot of maintenance. I mean, there's so much happening. The growth, the fuel price, and the competition, then some equipment not working, some holiday shutdown or some disturbances. So, so I think that is a high maintenance. But I think if your franchises are safe, see what is most important in investing is that right to win. That doesn't, see, you may not be doing very rapid business, but the right to win. I mean, there is only one Maruti.
Yeah.
So Maruti itself may not be growing, but the dominance of Maruti is not going down. So long as the dominance stays, I think broadly next 1 year, 2 year, 3 year, people are going to buy their cars. There is no alternative supplier to Maruti.
And Nilesh, that's exactly what's happening with IT, a sector that you track very closely, right? It's only that one TCS, no other mid-cap IT name, no Persistent, no Mindtree has been able to match up, or Infi, the close second for that matter.
Yeah, that's true over the very long term, and that's a reality that I think a lot of mid-cap companies in the IT space have honestly not delivered over a longer period of time. They definitely go through phases. A few quarters good, a couple of years good, but I think finally over 5 years, 10 years, they are not able to generate the alpha in terms of the business momentum. They're not able to grow at a significantly higher pace. But that's because we were in a world of application maintenance development. You're looking at those multi-year, multi-million-dollar contracts and all of that. Whereas I think now the big opportunity in IT is all about some of those new opportunities around artificial intelligence, robotics, automation. That's the entire space, and of course fair bit of digital transformation. To some extent that has already played out, but maybe it's still got some more way to go. So I think that's really the space which is interesting. And if you really look at it within mid-cap IT, for example, the two L&T twins, they've posted remarkable performance. Okay, I think their company is growing at 25-30%. I don't think any of the larger companies are going. The challenge out there, of course, is that they have a limited track record after going IPO. So they are around now only for 3-4 quarters. So one has to really see. But maybe, we still don't own them, but I think what they're probably doing, I think is truly remarkable. There are
challenges. Did you buy Persistent or did you buy L&T twins in your portfolio?
I think Persistent we've been owning for a very long time. And again, I think initially they really showed some good signs. But obviously, of course, after that, they have in a way slowed down significantly. They've had their own execution related challenges. One has to therefore see. So you'll have to give more time to some of these relatively younger companies, younger from a listing point of view, and see whether they can deliver not just for 2 quarters, but maybe for even a slightly longer period of time. But I still think that there will always be the potential for some of these players to kind of really become big and challenge the established guys. I mean, we've seen this even in the consumer space. I mean, 10 years back, you could have still been owning HUL, but if you don't say Page Industries, the difference is huge, okay, between owning HUL and owning Page Industries. So I think those opportunities will be there across sectors.
Literally closing comments from you. I'm going to quote Howard Marks here because he came on the show a couple of days ago and he said, look, after 8 years of a bull run in US stock markets, there is no point in extending your chips further. It is time to start taking your chips out. Now, assuming that we are in a pocket of turbulence because of election, because of macro concerns, because of other variable factors, how do you propose one should approach equity as an asset class? We always think that people are watching channel, they only have stock market income and they're only interested in stock markets. But they also need some advice on asset allocation. 3 years ago, if you bought a small cap stock, you just hit a home run. But now is it time to take cognizance of the word risk, which we don't talk about it again and again?
Well, yeah, I mean, absolutely. I mean,
time to diversify, time to raise cash. Are we there?
No, I wouldn't say it is time to raise cash or anything like that. But clearly something like what you rightly said, that risk is something which probably was a forgotten word. Obviously has to be kept in mind, and unfortunately it's the bull markets which, as they say, that you make the mistakes in a bull market, but you realize that mistake only when it's a bear market, okay, and that's nothing but risk, okay. So similarly, I think whatever good you will do in a bear market will show up when it is a bull market. So my sense is that yes, you should be centered around risk, but keep in mind that if it is a bear market or if it's a correction phase, you cannot ignore the opportunity which is sitting there in front of you. So it's important to look at risk, but don't overlook the return opportunity which can unfold over the next few years.
So it's Diwali, so we'll have some fun. Raamdeo, will you ever invest in Nilesh's fund, and Nilesh, would you ever invest in Raamdeo's fund? Let me see who says yes, who says no.
Yeah, so I don't invest in anybody's fund. So that doesn't mean that Nilesh's fund is bad, but I'm committed to my company that whether do or die, but I'll be with my company.
Okay,
Nilesh, who would you
I had a very different answer on this, but
quote unquote.
That's a very different. But no, I think Raamdeo ji is right. I think that the reality is that
Yes
every
or no?
investor.
Yes
It's like this. For example, does Buffett invest into any other fund? The answer is no. But that doesn't mean that he thinks that everybody else is wrong or bad, and vice versa. And it's not necessarily that we all go out there and invest in Buffett's fund, despite he's a genius or he's a legend or whatever it is. He's got a 50-60 year track record. It doesn't mean that we go out there and invest in his fund. So it's like this. You have to have, at the end of it, you will get appreciated for your own philosophy. That's about it. It's like a sportsman. I mean, Virat Kohli gets appreciated because he's Virat Kohli and not because he tries to play like Sachin Tendulkar or Sunil Gavaskar.
So Raamdeo, Saif or Chikrandita, what did you enjoy most in the Diwali interaction?
Radhika Apte.
Radhika Apte also.
No,
sorry.
she was not there in the show. But, but Chitrangana was, she said, I mean, I don't know if she did her number right or not, but she said 70% allocation in equity.
Yeah.
And Saif
And
said
fixed
that
income
he's just
also.
not there in the market.
Yeah.
So obviously our favorite is Chitrangana.
All right, gentlemen, it was lovely to have you on this Diwali show. Wish you and your family a very happy Diwali, and thank you for joining us.